Good Monday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks in Asia rise, led by a rally in Japan. Indian tech stocks, though, fall after the US says visa fees for skilled workers will be hiked to $100,000. A group of senior US House officials meet the Chinese premier in Beijing. That follows, of course, last week's phone call between their two presidents. Donald Trump suggests the Murdochs may be involved in the US takeover of TikTok. And France set to recognise the state of Palestine later today, following announcements by the UK, Canada and Australia. The moves have been sharply criticised by Israel and the US. Well, European markets ended last week a little softer, marginally softer. Today, it seems European investors are looking for direction once again. Currently, futures pointing to very, very modest gains. They're just 3 points on the Stoxx 50 futures. Here in the UK, FTSE 100 is pointing down by 0.1%. S&P E-minis a little softer by 0.1 as well, but that in the context of another fresh record high by the close on Friday. It was a week of positive gains for US equities by the end of the close, and on Friday, another record high notch on the S&P 500. NASDAQ 100 futures just pointing a little softer, just by 12 points so far in the session. Let's flip the board and have a look cross-asset. On the data front, of course, we do have data through the week on the US, with the lead-up, of course, to the Friday PCE gauge, that preferred measure by the Federal Reserve that will be in focus on Friday. A little bit of selling coming across the Treasury curve in the session today. The 10-year at 4.14, yields up close to 2 basis points on the benchmark. Euro-dollar at 1.17, 4 straight sessions now of dollar strength, and that's putting a bit of pressure on the single currency, currently down 0.1% in the session today. Brent at $67 a barrel on currently up 0.7% on Brent, as investors continue to eye the supply situation out of Russia and additional measures by Europe to try and constrain that to some extent. Gold still up 0.2% so far in the session today, and around those record highs still for the yellow metal. Let's cross over to Asia right now. Check in on Asian equities. There's a lot of focus on what's happening with the BOJ, clarifying some of its plan around the ETF sell-off that had caused a bit of a tremor in Japanese stocks on Friday. Winnie Su looking at all of this for us. Winnie.
Yeah, so overall, we're seeing just a little bit of upside in Asian stocks today. And like you mentioned, Tom, it's mainly driven by the gains in Japan. Yes, on Friday, we've got the BOJ saying that it's going to reduce its ETF holdings. And investors right now are focusing more on the fact that we are on the path of policy normalization. And the reduction of ETF actually come at a pretty good timing when we've got stocks at record highs and the confidence for markets is really coming back. Now, also in Korea, stocks are rising after Samsung finally got the approval from NVIDIA for its high bandwidth memory chips, and we've been waiting for that for a long time already. And when it comes to India actually showing a little bit more of a weakness in Asia, it's really that region that's getting a hit by the most when it comes to the impact of the changes of the H-1B visa program. And that's also partly because Indians actually account for more than 70% of all H-1B visa holders, and you've got these stocks under pressure when it comes to the IT stocks, and also hurting overall sentiment after India already got hit by that 50% tariffs from the US. And actually, China today not looking particularly great either. You look at the CSI 300, quite flat, but HSCI also down. You know, there were a lot of excitement heading into this call between Trump and Xi. Yes, we have that positive tone coming out of the call, but overall, no concrete plan or no concrete progress when it comes to what plans they would have going forward. So a bit of a disappointment around that front. And another actually very important news in the region is that big typhoon that's approaching Hong Kong. And we're hearing that the airport is actually going to be shut down for about 36 hours, and that's going to be the longest that we've ever seen.
OK, the super typhoon bearing down on Hong Kong. Bloomberg Asia equities reporter Winnie Su, thank you very much indeed for the update on the Asian markets. And Winnie talking, of course, about the changes around the visas to skilled migrants into the US. President Trump's $100,000 fee then on new H-1B visa applications is triggering confusion for corporate America and, of course, for the workers involved. The move is aimed at cracking down on what the White House calls abuses of the program, which they say undercuts American workers.
Everyone's going to be happy, and we're going to be able to keep people in our country that are going to be very productive people. And in many cases, these companies are going to pay a lot of money for that, and they're very happy about it.
Well, the restrictions and fees came into effect on Sunday. Let's get more from Bloomberg's senior editor, Balazs Pence. Balazs, why has this change been implemented then by the White House, by President Trump? What is the rationale behind this?
Has been a core issue for President Trump ever since he entered the political arena. And clearly the administration sees it as a winning issue, as we see from their enforcement actions across America. The H-1B program in particular has been a flashpoint. Last year there was a big debate between different factions within the Trump coalition, his big tech supporters being on one side and sort of the more traditional core MAGA people on the other side. And the critics of the program say that this program is rife with abuses, as President Trump alluded to in the clip that we just saw, and it also denies American workers of opportunities in some of the highest paid industries, some of the highest paid jobs that are available. So it looks like President Trump has decided which side to come down on in this particular debate.
And Balazs, what has it done to those who are on these visas, those who are looking to apply for these visas, and the companies as well that employ so many people through this route? There's been a lot of confusion, it seems.
That's right. And as you mentioned, a lot of people are employed under this visa. It's a massive program. Amazon alone employs more than 10,000 people on this visa. And if we go down the list of the marquee names in Silicon Valley, they all employ thousands and thousands of people. There was a lot of confusion over the weekend, and companies took a little time to figure out what's actually going on. Some companies advised people to cancel travel or to stay in the country. Some people were worried about their ability to come back into the U.S. from trips they have been taking. But by the end of the weekend, the White House came out with some clarification and told us that this will only apply for people who do not yet have the H-1B visa and people who would get in the next tranche of this program, in the next visa lottery. So it will only apply to those people. People who currently have the visa do not have to worry about that right now.
OK, Bloomberg's Balazs Pence on that story. The implications, of course, for individuals, but also the corporations that rely on that programme. We'll continue to monitor that story. Balazs, thank you for the update. Let's get more then on the potential impact on the markets from the changes around US visa fees, and bring in Bloomberg's Valerie Teitel. Val, is this likely to have a market impact?
Well, look, the market overnight is clearly telling us it's going to have a minimal impact, at least when it comes to those hotly watched tech names that you guys just went over there. The Mag 7, very heavy users of these H-1B visas. 5 out of the top 10 of the heavy H-1B users are U.S. tech companies, are those Mag 7s. But NASDAQ futures are trading little change at the moment. Yes, they're in the red, but not by much. Might go down to what we hear from Jerome Powell off the back of this. We are due to hear him speak on the economic outlook on Tuesday. He will likely get asked what he thinks about this change in visa policy, whether he's more concerned about the negative growth impacts, or perhaps he's concerned that might this be something that could even complicate the outlook for the labor market, maybe even be a reason for the labor market to tighten in the near future. All adds to this complication around Trump's policies and what they mean for the U.S. economy. He might point out to Tom something that he mentioned in his press conference last week, that college graduates are having a hard time finding jobs, and maybe this will make it easier for them in the future. I doubt he'll weigh into something as that political, but he has mentioned before how the long-term unemployment rate, those unemployed for 27 weeks or more, is actually the highest that we've seen in 10 years, makes up over a quarter of the total unemployed workforce in the U.S.
OK, Bloomberg's Valerie Teitel, thank you very much indeed, with the context around the employment piece, of course, amid these visa fee changes in the US. Now to the geopolitics, following, of course, the conversations between the two presidents of the US and China on Friday, characterised by President Trump as a positive call. A group of senior US House representatives is now in China for talks with President Xi Jinping's government, the first such official visit in 6 years. 6 years. The US group is led by Democrat and former House Armed Services Committee Chairman Adam Smith, as the world's largest economies edge closer potentially to a trade agreement. Bloomberg's chief North Asia correspondent Stephen Engel is in Hong Kong with the details on this trip. Steve, from your perspective, how significant do you think politically and economically this meeting actually is?
I think it dovetails nicely with what is trying to be put in place over the coming weeks, and that is a meeting between Xi Jinping and Donald Trump, perhaps on the sidelines, at least that's what the White House is saying, on the sidelines of the APEC summit coming up at the end of October. And I think the reason why Trump is also saying he's now going to visit Beijing probably in the beginning part of 2026, I just don't think the timeline works out to have the appropriate deliverables for both Trump and Xi Jinping for a high-level meeting in Beijing in October or even early November. Yes, the TikTok issue is sort of being resolved. It hasn't been signed yet, and the can has been kicked down the road on the deadline for compliance with that bipartisan law that was passed in January. But again, this delegation of House representatives, senior House representatives, is important to kind of break the ice. And those are that's the term that the Premier Li Qiang in China used yesterday in hosting this delegation from Washington in the Great Hall of the People in Beijing. So it's a good step to talk, to maybe try and get to understand each other a little bit better. 6 years is an eternity in this current political landscape. So having that face-to-face dialogue is important.
Yeah, and Steve, you bring up TikTok because President Trump, of course, also suggesting that Foxconn chairman, and this came out of nowhere, it seemed, Foxconn chairman Lachlan Murdoch and his father Rupert are involved in the US takeover of TikTok from its Chinese owners. Let's take a listen to the president.
Yeah, we're going to have a very tight control. And look, it's an amazing thing that's been created. There's tremendous value with TikTok. And I'm a little prejudiced because I frankly did so well on it. You know, it got me numbers that nobody's ever even heard of before. So a lot of people want it. The young people of this country want it badly. The parents of those young people want it badly. And so we were able to work out a deal with China. And it's a very good deal for us. I hope it's a good deal for them.
So, Steve, where do we stand on the question of TikTok and the time frame that you alluded to in terms of getting this finally completed?
Yeah, I thought we had more clarity on TikTok following that meeting or that phone call on Friday. But the more I dig into it, the more I realize, wait a minute, China hasn't necessarily signed off on this completely in the narrative, in the vein that the president there has talked about. Where did he come up with, Lachlan and Rupert Murdoch, as well as he threw out the name Michael Dell of Dell Computers? So, what we've heard is that Oracle definitely will be doing the security part of American data in this new entity. Andreessen Horowitz would be involved, and Silvergate Management involved. But to add these other individuals, it just shows me that it's not completely sewn down yet, the details of this agreement. That's why we're going to have to kind of plow through until mid-December to get that signed. And we have to get a better understanding about who will actually hold and be able to control that key algorithm. China, up until now, has been fairly reluctant to hand over the keys to the castle, if you will, the algorithm to TikTok. So I think there's still a lot of answers, a lot of questions to be answered with this TikTok deal. But at least from the White House narrative is that they have a deal in principle based on that phone call. Now the backroom bargaining continues.
Yeah, not yet signed, sealed and delivered on TikTok. Chief North Asia correspondent Steve Engel, thank you very much indeed for that update, Steve, and batten down the hatches. I hope everyone stays well, of course, in Hong Kong ahead of that typhoon. Here's what else to think about through this week. Tuesday, the United Nations General Assembly begins, of course, in New York. We've got a great piece on the security measures being put in place ahead of those meetings. Also on Tuesday, on the data front, European flash PMI data will cross as well. So another gauge of the health of the European economy, the Eurozone economy. We'll break that for you, of course. And on Friday, the big one when it comes to the US and at least the lens of the Fed with that preferred measure of inflation, US PCE price index coming through, of course, on Friday with the dot plot signalling 2 additional cuts by the end of this year, following the first cut, of course, of the year from the Fed last week. So the inflation story given new detail on Friday. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go. On the terminal, front and centre, as you can see, is the impact of those H-1B visa changes with a fee of $100,000 and what it means for employees from India and China and the US tech ecosystem. Coming up, France set to formally recognise the state of Palestine, following the footsteps of the UK, Canada and Australia. We bring you the details on that story next. Plus, later in the show, I will be joined by Sinha Haldea from Raymond James. We're going to get her thoughts on current investor sentiment towards the US and her assessment of the IPO window so far. Stay with us for that conversation. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, France is set to recognise the state of Palestine later today. This, of course, following the decision by the UK, Canada and Australia to do the same. They made that decision on Sunday, of course, formally recognising a Palestinian state, joining a growing global consensus. US President Donald Trump, though, and Israeli Prime Minister Benjamin Netanyahu have criticised the move, arguing it would incentivise Hamas and prolong the war with Israel. UK Prime Minister Keir Starmer says both Israelis and Palestinians deserve to live in peace.
In the face of the growing horror in the Middle East, we are acting to keep alive the possibility of peace and a two-state solution. That means a safe and secure Israel alongside a viable Palestinian state.
Let's bring in Bloomberg's Germana Pasecci, of course, standing by in Dubai. Germana, what are we expecting to hear from France? Are they going to echo exactly what the UK, Canada and Australia have done? Is it slightly different? How is this all lining up right now?
Well, most of the nations that you just referenced had signaled in early summer that they were looking towards recognizing a Palestinian state at the UN General Assembly. Today, the main event is taking place. France is also expected to move along the same lines as we heard from UK, Canada, Australia and Portugal yesterday. Those countries put out what was essentially coordinated statements on the statehood acknowledgement. And this actually brings the total tally of UN nation states to 150 or around 150 of those who officially recognize Palestine as an independent state. But also it's significant because France, Canada and the UK would be the first G7 nations to do so as well. So it is a significant step, but of course symbolic as well, because at this point there are no well-defined boundaries, there are no borders for what this Palestinian state might look like. In an interview with our colleague David Gura on Friday, the UN Secretary General Antonio Guterres said that this is part and parcel of one way that the international community can apply pressure on Israel and tell them essentially that they cannot continue with the annexation of West Bank, that there is a need for a ceasefire, unconditional release of hostages, of course, by Hamas, but then also it will keep alive the prospect of a two-state solution. Now, Israel were very quick to respond. The Israeli Prime Minister likened this to a reward for Hamas, a reward for terrorism. IDF also put out a statement straight away on X, suggesting that not only is this a reward for Hamas, but that the Palestinian Authority are also part of the problem as well. The Israeli Prime Minister went one step further and said that he will react and respond to this once he is back from the UN General Assembly by the end of this week. Many within his own party are actually calling for the further annexation of West Bank. So, yes, significant step, but remains to be seen whether this actually will constitute enough leverage on Israel and on its ongoing military activities in the region, and whether they may change course. But from initial responses that we've got from the IDF, it doesn't seem to be the case.
And Germana, you touched on the Israeli response. Just briefly, how has the US or how is the US likely to respond?
Well, last week, the UN General Assembly also voted overwhelmingly in support of a declaration to work towards the two-state solution. This was a motion that was put forward by Saudi Arabia and France back in July of this year. U.S. boycotted that event. They also didn't vote in favor of that declaration. Morgan Ortegas, who's the deputy envoy for the Middle East, and she's also a senior diplomat within this Trump administration, has said that this is essentially another misguided and ill-timed publicity stunt. It undermines diplomatic efforts, and that it would end up emboldening Hamas. So the U.S. very much rejecting the idea that nations around the world can move towards a unilateral declaration of a Palestinian statehood, and that can only take place once you have negotiated a ceasefire, once Hamas have fully demilitarized, and you can move on to another chapter and talk about future governance around Palestinian territories. But that going about it this way, first unilaterally declaring a statehood, undermines the diplomatic process. That is the official stance of the U.S.
OK, Horizons Middle East and Africa anchor Jumana Basetchi with that update. Jumana, thank you. Coming up, we're going to switch focus because demand for underwater power cables is surging, but there are not enough ships to lay them. We're going to have more on what is driving that demand and what it says about the infrastructure needs and maybe some of the vulnerabilities as well with BloombergNEF team and their expertise. That's coming up. This is Bloomberg. Welcome back. So, demand for underwater power cables is surging. BNEF expects it to more than double by 2030 to some 34,000 kilometres. But laying that much cable is going to be a tall order for a number of reasons. Let's get the details and bring in Eva Gonzalez now, from the Grids and Utilities team at BloombergNEF. The team of analysts that we have in-house who do some fantastic work on all of this for us. What is driving, good morning, what is driving the demand then for this cable build-out that you and the team foresee?
Yeah, so European cable demand for power cables is surging. Basically, the drivers in the past have been cross-border interconnectors, but in the future it's mostly offshore wind. And demand is growing very rapidly, as we can see in the image. Mostly because there are more projects, but also the projects are getting longer. OK, more projects are getting longer. Offshore wind is a big factor. Yeah.
When we think about infrastructure vulnerability and the risks, how vulnerable is this infrastructure to potential attacks or potential disturbance? Well, you ask a very good question. Basically, cables are generally laid on a trench so that they are protected from fishing gear and anchors. And that's why installing them is so slow. OK. So who is going to be building this out? Who are going to be involved? Is this private sector? Is it the state? Who comes together to build this capacity? In my analysis, I focus on the biggest cables, which are high voltage direct current, or HVDC. These are the ones that transport the most power across the longest distances. And basically, Prysmian, Nexans, and NKT had 69% of the market share in terms of kilometers installed in Europe. But the surging demand, as well as multi-million-dollar framework agreements, are making room for external players. And so Sumitomo Electric and LS Cable and System are planning to build their first ever European HVDC cable factory on UK soil. Oh, on UK soil. OK, yeah. So some upside there for the UK as this demand and the private sector tries to meet that demand that you've outlined for us. Really great analysis. You can get more, of course, on Bloomberg.com and on the terminal. Eva Gonzalez Isla from BloombergNEF's Grids and Utilities team on the cable demand, of course, and what it means and what it's going to take to get it to the point where those consumers need it. Coming up, we're going to get back to the markets with Sinha Haldea from Raymond James for a conversation on how to position. Stay with us. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. Happy Monday, I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks in Asia rise, led by a rally in Japan. Indian tech stocks, though, fall after the US says visa fees for skilled workers will be hiked to $100,000. A group of senior US House officials meet the Chinese premier in Beijing following last week's phone call between their two presidents. Donald Trump, meanwhile, suggests the Murdochs may be involved in the US takeover of TikTok. Plus, France set to recognise the state of Palestine later today, following announcements by the UK, Canada and Australia. The moves have been sharply criticised by both Israel and the US. Let's get to the markets then. European equities closed a little softer on Friday, but as fresh record highs for US markets on the S&P 500 after a solid week of gains and the first, of course, cut from the Federal Reserve. This year, expectations, at least the dot plots, pointing to an additional 2 cuts. Markets pricing in just shy of that so far as you look at some of the options trading. European futures currently flat, looking for the next catalyst, it seems. FTSE 100 futures just a little softer by 0.1%. S&P E-minis then after that fresh record high on Friday, pointing lower by 5 points. Nasdaq 100 futures looking to drop just 15 points. Let's flip the board and have a look cross-asset. The dollar strength story is there, at least 4 straight sessions where you've had the dollar gaining. We'll see how long that momentum could be sustained. The 10-year is at 4.14, so yields just up 2 basis points. A little bit of selling across US Treasuries right now. Euro dollar at 1.17, again on that dollar strength. The euro is down 0.1%. Brent crude up 0.8, a bit of a pop for oil. So look at the oil majors at the open. $67 a barrel on Brent. And gold gaining 0.3% and still close to those record highs for the yellow metal. Now, the Federal Reserve's preferred gauge of inflation, underlying inflation, likely grew at a slower pace last month. Friday's reports could give policymakers more leeway to address weaknesses in the US labour market. For more, I'm joined by Sinha Haldea, the global head of private capital advisory at Raymond James. Sunaina, we'll get to all things private equity and private credit shortly, but on the headline level, we have a Fed that is now in cutting mode, and we can interpret how dovish or how conservative this Fed is, but clearly cuts seem to be expected, further cuts. And at a time, of course, where we are close to record highs across global equities, how comfortable are you with the dynamics we're seeing in these markets at this point?
I think the dynamics remain incredibly bullish for equity markets. Why? Because given the record highs, I look at the technical flows. The technical flows remain very, very inclined towards money still sitting on the sidelines in money market accounts. $7.7 trillion sit in money market accounts. You've seen inflows coming out of those money market accounts into equities, given the expectation of rate cuts and lower yields on those accounts. But still, we're at the start of that shift, given where it was in 2020, 2021. So I think the technicals could really drive this market much higher. Personally, I'm a lot more cautious about where equities price. A fundamental value investor, when you see forward PE at nearly 24, you have to think about, wow, is that getting very expensive? So how do you play this equity market? Through risk-adjusted bets like reverse convertibles, where you're capping your upside, but you're also hedging your downside quite markedly, and doing that on select baskets of names makes a lot of sense today rather than outright longs at these levels.
Do you start to price in, or at least factor in, the risks of resurgent inflation in the US in 2026?
I think you have to have that in the balance, but are those headlines enough to look through technical inflows if we have a Fed in cutting mode? I think that's the big question, and it's hard to tell because right now the markets are looking through tariffs, they're looking through the inflation picture, they're looking through the labor markets, saying, listen, this is a Fed that has to cut because of lots of different pressures and dynamics. And, markets are pricing in enough cuts now to move the technicals into the market. I think that's going to be a dynamic that drives, at least in the short term. In 2026, you have to consider what's happening with the balance sheets of companies and P&Ls. Right now they've eaten all the tariff impacts, but you do have retailers saying that there will be pass-throughs of costs coming through. Is that enough to really shift the inflation picture such that a Fed goes on pause again? Markets are saying that's unlikely today, but I think the risk of that is still significant and not priced in.
How conducive is this current environment to deal making?
It's very conducive. Anytime you see rates coming down, that's a good thing when it comes to cash being invested off of corporate balance sheet, to cash being put to work from private equity sponsors who are sitting on lots of dry powder at the moment, waiting for a more conducive deal-making environment. It is getting better quarter on quarter. Q2 and Q1 were relatively soft in 2025. The market for deal-making has come back, and so is the IPO window starting to open in a meaningful way. Again, given the rate-cutting cycle, but also the technical moves of investors into markets other than cash.
In a lower rate environment, does private credit become less essential or more essential?
Private credit now is a mainstay option for many corporates who choose not to go access the public markets, who choose to go down the direct lending path when it comes to assessing whether they can borrow and at what rates. It's a $2 trillion market today. People don't understand the full size and scale of it and how accessible it is to corporates today. So I think that remains a mainstay option for corporates to assess and will continue to do so for some time.
Okay. When it comes to so there's some changes in the US that are quite significant that could impact not just institutional investors but retail investors when it comes to private equity. Talk us through those changes and where we are in that journey.
I think we have two different chapters that have opened, one over the last 3 to 5 years and one that's opening right now. The one that opened a few years ago and is really gathering scale and momentum is the advent of semi-liquid interval funds for private markets, both private equity and private credit and direct deal making that can be accessed now in a more regular liquidity structure. What does that mean? Quarterly liquidity or semi-liquid, semi-annual liquidity. Remember, most traditional private equity closed-end funds are 10-year locked products, and that's hard for retail investors to access. Now, because of the shifts in the US and UK regulation, European regulation, means that many retail investors can access private equity in more liquid structures. You give up some return for it, but you have the ability to access that diversification. And recently, the Trump administration opened up 401k or defined contribution flows into private markets as well. Both are a huge technical inflow into the asset class. I think it remains to be seen what long-term impact that has on returns and so forth, but those inflows are coming and coming some more.
Okay, the inflow show when it comes to private equity, and also you've been talking about the money that's still on the sidelines when it comes to the money markets and how that could influence potentially further upside for equity markets. Before we let you go, what are you hearing based here with Raymond James? What are you hearing from your clients about how much exposure they want to have to the UK at a time when the BOE seems to be on hold and we have a November budget that could be deeply consequential for these UK markets? I
think you summarized it: on hold. It's a wait-and-see picture. It's a situation that has been incredibly impacted by the fiscal crisis that we see ourselves in, and it is a bit of a crisis because investors need to know what is the way out, what is the path out, and what does that mean for growth. The growth seems to show up in fits and starts, nothing sustainable yet, and corporates seem to be very negative on the outlook of the UK. That said, UK assets on a relative basis are therefore cheaper. So if there are quality assets here, they're being picked up by private equity. There's a lot of public to privates that have happened over the last few years. It's a mixed picture, but for certain investors who want to come in size, they're waiting to see what November brings in terms of budget, in terms of incentives for entrepreneurship and so on.
And that comes back to the deal-making piece. Sunaina, thank you very much indeed. Always a pleasure having you around the desk bright and early this morning. Sunaina Sinha Haldea, of course, the Global Head of Private Capital Advisory at Raymond James. Now, Bloomberg understands that Hong Kong Airport is considering closing for 36 hours because of a super typhoon. It would be the longest shutdown in the airport's recent history, underscoring the strength of Typhoon Regasa. Let's get more on this Bloomberg scoop from our Asia transport reporter, Danny Lee. Danny, what have you been hearing then from Hong Kong Airport?
Well, we're going to get an official confirmation at the top of the hour, Tom, about a closure for 36 hours or thereabouts. And so this would mark the longest closure potentially for up to 20, 25 years, because the longest time that the airport has been closed is around 26 hours, and that stretches back to 2017. But this is the kind of disruption that a huge mega aviation hub does not want. You look back to what happened to Heathrow back in March or thereabouts when it was closed for 24 hours. But the kinds of passenger flows we are talking about, the travel chaos for airlines and passengers alike, like 200,000 passengers a day almost come through to and from Hong Kong Airport. So the size of the impact over a 36-hour period will be quite sizable.
Yeah, huge impact, of course, on the airlines, to your point, and on travellers, of course, not just in Hong Kong, but globally, anyone who's looking to transit. What are we talking about in terms of the size and scale of this time? I mean, these are pretty drastic measures being taken by the authorities in Hong Kong, and that speaks, I guess, to their concerns about how sizable this typhoon is going to be and the potential impact.
Yeah, not just for Hong Kong, but for southern China, as this typhoon barrels its way past the northern Philippines, and just the scale and size over a 2 or 3 day period and the strength it's whipping up right now. We're talking about Category 4 equivalent hurricane size winds of 230 kilometers per hour. So this is very serious, and the timing of which the airport authorities and the government officials in Hong Kong have tried to forewarn to get people to be prepared for this storm is quite notable. But this is a busy storm season for Hong Kong overall. Had 11 storms already this year, and so therefore it just reflects just the kind of changing climate we are seeing as well, given that Hong Kong is facing a lot more disruption in the Asian financial hub this year and maybe even year.
Yeah, that's a really important point, Danny, isn't it, in terms of how this could become a more frequent event as a result of the climate crisis. Of course, one impact being felt potentially by Hong Kong, and this measure potentially to shut down Hong Kong airport for 36 hours on the ground for us, of course, with that scoop as well. Bloomberg's Asia transport reporter Danny Lee. Welcome back to Bloomberg Daybreak Europe. UN Security Council meeting today at Estonia's request. It follows a violation of the country's airspace by Russian fighter jets. Estonia's foreign ministry termed Russia's actions, quote, part of a broader Russian campaign to test the resolve of Europe and NATO. Bloomberg's Oliver Crook is in Berlin. Ollie, Estonia taking a pretty firm response then to this incident.
Yeah, and you can understand why. They've been one of the most vulnerable nations and most concerned nations since the very beginning of the war in Ukraine. And just to sort of detail this incident a little bit further to explain what exactly happened here, what it sort of stems to is three MiG-31 Russian fighter jets that violated the Estonian airspace for a total of 12 minutes on Friday. This would be the fourth airspace violation Estonia has had this year from the Russians, and it has caused the Estonians to call for this meeting at the Security Council in New York City. That will be happening at 10 a.m. a little bit later today Eastern Time. But it also had them invoke Article 4 of NATO, which is consultation among NATO allies whenever the territorial sort of integrity is considered to be threatened. And we should say that is the 9th time that article has ever been invoked since 1949. And of course, the last time it was invoked was only 12 days ago by the Polish, who suffered airspace violations and a number of drones that went down, unarmed drones that went down within Poland, some up to 300 kilometers within Poland. So the NATO sort of allies are seeing this as a sort of concerted Russian effort to sort of test the limits of what NATO is willing to take and to see basically what the response is going to be. And we have not yet had a full response from the United States. Of course, this is where all attention is focused, is how Donald Trump will interpret this. Yesterday, he said that he did not like what he'd been seeing over Estonia. But again, we're waiting for the response there. And as far as the Russians are concerned, what they said, the defense ministry saying that they denied that the jets had entered Estonian airspace at all. But of course, the action now kicks off to New York City, the Security Council of the United Nations that will be convening at 10 a.m. Eastern Time.
Yeah, there's one thing with saying I do not like something, and another when it comes to full-throated support for NATO. And maybe that's what members are looking for. When it comes to the economic response, Ollie, what are the Europeans looking at?
Well, listen, they had rolled out their sanctions on Friday, or their package, 19th sanction package, which involves a great number, many things. But the main thing that really the headline that came out on Friday was that the Europeans are wanting to cut off LNG deliveries from Russia to the European Union a year earlier. These were supposed to run through 2027. It was at the end of 27 when those were supposed to cut off. Now what the Europeans are proposing is cutting off that LNG from coming into Europe by the end of next year. We should say that last year, Tom, despite the war that's been going on, despite the sort of rhetoric that we've got from the Europeans, last year 19% of all of the gas that went into Europe was still coming from the Russians, and that is something I put to the EU Energy Commissioner when I spoke to him on Friday. Have a listen.
So what we're doing now is that we are banning import of Russian LNG. We're also doing other measures that maybe we can get into later, but I think that this is definitely the most important thing that we are announcing today. This will have big effects on the revenue in Moscow, and of course it is totally unacceptable that we are in a situation where we are still in Europe, although we've brought our imports down quite significantly, we are still importing Russian LNG, and this has to stop, and that is why these sanctions are now being put forward.
And Commissioner, I think that potentially one of the signals that people will take from what we've seen in terms of the action today, we should say that last year 19% of all the gas that came into Europe was still coming from Russia. The signal many may take from this that it takes Donald Trump to get the Europeans to do basically what they've known that they've had to do for a long time, to which you reply what?
To which I reply that we have actually, since the war started, brought down significantly our consumption of Russian gas. It used to be 45% a couple of years ago. Now it's 13%. But I do acknowledge that that 13% is still far too much, and it is totally unacceptable. So I also welcome that the US and the American president is now leaning into this debate. We need to put as much pressure on Putin as possible. We need to do our part in Europe for sure, and we appreciate that the US is also doing their part.
OK, the EU Energy Commissioner speaking to Bloomberg's Oliver Crook. Ollie, thank you very much indeed. Now, staying on Russia, but it's time now for a focus on cybersecurity, because Russia has devised a plan to intervene in elections in Moldova and disrupt the government's efforts to keep the country on the path towards European Union membership. That is according to documents reviewed by Bloomberg's Alberto Nadelli, who joins us now. Alberto, what have you found out?
Morning. So this week, Moldova has these pivotal elections where it will fundamentally decide whether it stays on a path towards the EU or whether it tilts towards Moscow. And Russia has put in place these plans since the spring, coordinated directly by the Kremlin, to put in place a multi-pronged strategy to try and disrupt that vote by engineering the perception of a contest that is competitive, massive disinformation, massive cyber attacks, recruiting criminals to provoke and stage protests, recruiting voters of the Moldovan diaspora abroad, paying them to fly to polling stations and vote, using compromising materials to try and pressure key public officials in various positions, such as the police, electoral commission, and so on. And ultimately, the goal is to try and undermine confidence in the electoral process, to try and steer the result in a certain direction, and to ultimately remove the government from power.
OK, Bloomberg's Alberto Nadelli on pretty extensive efforts, it seems, by Russia to intervene in those elections in Moldova and what it has in terms of broader consequences, of course, and whether or not this is a template for further action by Russia, which, of course, has meddled in other elections. Alberto, thank you very much indeed. There's plenty more coming up. Stay with us. This is Bloomberg.
I thought the Fed's decision was a good one. This looks like a sequence of 3 moves in a row through the end of the year.
Would you have voted for 50 this week?
No, I don't think so.
Former St. Louis Fed President Jim Bullard's there, commenting, of course, on that decision by the Fed to cut by 25 basis points. We'll get to PCE inflation shortly. But let's remind ourselves what happened on Friday. We saw a bit of softness across the equity markets. It was pronounced in Japan, of course, on the announcement from the BOJ that they would be unwinding some of their massive ETF holdings of equities. They hold about 7% of all Japanese stocks, about a little over $500 billion US dollars. They announced they'd be unwinding some of that, and that put a lot of pressure on Japanese stocks. But they have clarified this morning, don't worry, it's going to take about 100 years to do that, because they're just going to do $4 billion a year. So that's led to a return in some of the gains coming through for Japanese stocks, and it may have a global impact as well, of course, those fund flows in and around Japanese assets in focus. That is the holdings right now, the BOJ. Let's flip the board and have a look when it comes to the tech story, and some interesting components when it comes to concerns amongst those who have those concerns about bubble territory when it comes to US tech stocks. A reminder that it's well beyond NVIDIA. It's the more boring parts of the tech story that have also seen remarkable gains, like Seagate. That's the white line here, up almost 160% year to date, the maker of hard disks for storage of memory, followed by one of its competitors, 137% gain there. And then you have a 93% gain year to date for Micron, a maker of memory chips, which are far less interesting for many than those AI accelerators produced by NVIDIA. Now, some are suggesting that this is an example of just how far this demand around AI is going. Others suggest that maybe this is a reminder that this is looking a little frothy when it comes to this theme. Let's flip the board and have a look at the preview around PCE. This is an inflation gauge, of course, expected to moderate. The details out on Friday. We know this is key for the Fed, of course. Dot plots pricing in another 2 cuts by the end of this year. Now, the CEO of ARK Invest, Cathie Wood, is coming up at 8:30 a.m. UK time, so stay tuned for that interview. And the Fed's newest governor, Stephen Myrick, speaking at the Economic Club of New York. He voted for 50. Catch that live on Bloomberg at 5 p.m. The opening trade is up next. This is Bloomberg.